Right, good afternoon. Welcome to today's live recap. So heading into the open, our intermediate term bias was still neutral bullish, and our short-term bias was now neutral bearish. And the main question was whether we were now going to get a break below the 65, 25 to 40 initial support, which we were also using as the bull-bear zone, and this was a short-term bias confirming zone. So we would need to see excess weakness, big and sustained downside momentum, and the NASDAQ also breaking lower in order for us to get a sustainable breakdown below initial support. And as long as initial support was holding, we could simply balance in the lower part of the recent multi-day range. And that's why in the morning video I talked about even the possibility of a false breakdown attempt below initial support, because as we've been discussing, this is a significant area of support, right? This is not even a intraday bias confirming zone, which usually has pretty good edge. This is a short-term bias confirming zone. So you can think of it as a larger time frame bias confirming zone. So it's a significant inflection point, and for that reason, we would need to see a lot of weakness and downward momentum. So effectively, we need to see signs of initiative selling in order to break that zone. On the upside, we would need to take out the pre-market and initial resistance in order for the day's bias to turn bullish. Holding below those areas could still leave the weakness from yesterday and the overnight session in play. Any break above it would serve as an intraday bullish indication, and that could then open the door for upside range expansion into 66, 48.75 to 59.75, and 66, 64 to 70 half. And then we wanted the upside to be capped by the 66, 85.75 to 95.75 area. So if this balance breakdown or the sell-off from yesterday is going to remain in effect, then the upside should be capped by 66, 85.75 to 95.75, and the bias confirming zones here had potential to serve as a failure or reversal point. Now remember, any of these can serve as that reversal point, and the higher the market pushes, the closer it gets to the zone that has potential to cap the upside, the higher the odds that larger time frame sellers are going to step in, and then we can get that intraday reversal, or at least a larger downside move off of one of these bias confirming zones. So that was the market context heading into the open. Now let's jump into the chart and see how it played out. Now this morning it's interesting because you can see that early in the session, the market is testing the pre-market resistance, 65.88 to 6600. This is a bias changing zone, and holding below it tells us that the overnight weakness and the control to the sell side from yesterday is still very much in play. But at the same time, we are seeing a bullish advanced decline line. We are seeing the NYC take hold above zero, and it's not printing significant upside values, but it is still a sign of sustained momentum across the broader market. So you have a situation here where the market's testing resistance, the short-term bias is neutral bearish, but the market internals are painting a very different story. Now in this situation, you have a couple of options. One is that because of the internals, you just stay out and you wait for clarity. And that's a perfectly valid approach. The other is that you give more weight to the market context, the directional bias, and trade location, and you position yourself on the short side, but you do so in a defensive manner that allows you to get a quick scale out, cut your risk in half, and then see if you can get 2 or 3 R out of that trade. So On the upside, if you want to be defensive, then remember that in the morning video, the idea was that sellers can maintain the bearishness from yesterday below the initial and pre-market resistance, and ES would need to take both of those areas out in order for the intraday bias to turn bullish. So one approach is that you just fade pre-market resistance on its own. So let's first go through that scenario. So pre-market resistance, you can see that by default, Vulcan is looking for a move down into the short-term bias confirming zone, the initial support. And this is what that trade idea looks like, right? 65.90 half short. Stop, of course, is beyond the zone. Scale, fairly easy. 65.80, high probability at the pre-market support, and final target at 65.40. And that's good for 3R. So that is one way to structure it. Another way, if you want to be more defensive with your stop placement, is to daisy chain the setup between pre-market and initial resistance. So let's go ahead and set up the trade at the initial resistance zone. So let me clear that and focus on this zone first. So 66.13 to 23 is the initial resistance, and we have to take both of these areas out in order for our bias to turn bullish on the day, and we'll go ahead and target 40 here as well. So in this case, you can see that the viable entry is at 66.08 quarter. It's actually ahead of the zone, but it's good for 3R, so that is a viable entry. The entry does not have to be at the zone or in the middle of the zone. We're simply looking for a viable price that can give us 3-to-1 reward to risk. And in this case, you can see that the scale target is at the broken pre-market resistance. That checks out. The high probability is still at pre-market support, and the final is at initial support. So this is a perfectly fine way of structuring the trade, and these are the default targets set in Vulcan. So what we can do is, since this entry is 08 quarter, we can take our pre-market resistance entry and we can push the stop up to 08 half. Now, of course, anytime you do this, you do risk missing the trade, right? So just to be very clear, you might not get filled if you're overly cautious on the idea, right? So with that caveat out of the way, this would be a valid way to structure the trade, but you do risk missing the trade, right? So you can see that 65.96 quarter in this case is where you would get 3R, and the first hour high was 65.96, right? So you'd have to kind of finesse the entry a little bit to actually get the fill. But this would be the defensive approach, and that is a option for you as well. But like I said, it would be perfectly valid just to short pre-market resistance on its own, and then if we break out, then we can take a separate trade at initial resistance or somewhere near it. So this is the first sequence of the day, is short side focus. And again, if you can get a better price, 65.90 half is what would suffice to get 3-to-1 reward to risk. But if you're able to get a better fill at a slightly higher price, then all the better, right? I mean, then you might get 4R out of it, or it might allow you to push your stop a little bit further out of that zone so that you still get 3R, but you're giving the trade more room to work out. These are all viable things that you can do. And remember that we want to be systematic, but at the same time, don't forget that we are still discretionary traders. And depending on your risk tolerance, your style, your personal preference, you do have some leeway on how you want to structure the trade. The main thing is that the stop loss has to go beyond the zone. The targets should be logical and make sense. But when it comes to entry, the better the entry, the better the risk reward, the further your stop placement can be. So obviously, nailing the entry has its benefits. The only problem is that if you are overly focused on nailing the entry, you run the risk of missing the trade altogether. So you have to balance that, and it's a constant struggle to get that balance right. So this is the first trade idea, short, targeting initial support. And in that case, we are giving more weight to the market structure, to the trade plan, to the directional bias, and the resistance zone. But at the very minimum, what we don't want to do is buy the market at aggressive location simply because of the internals. Because right now, with our short-term bias being neutral bearish, we're still open to buying the market. We're still open to the long side, but it's better to secure good trade location or limit your long setups to the key zones. And that is not something that was available to us early in the morning. And by the time the market tested even the pre-market support, now ES had already balanced ahead of that zone. This is not as strong of an area to begin with, so I don't think it makes sense to buy the pre-market support. But when the market pushes down into the initial support zone, this is a worthy zone. It's the initial support, it's the bull bear zone, it's the short-term bias confirming zone. And remember that we would need to see signs of initiative selling in order to get a breakdown below this area. And given that it's a Friday, we're heading into the weekend, and the market's already quite oversold, it's already questionable whether new sellers are going to be willing to jump in at these oversold price levels. And then you combine that with the fact that you have a bullish disconnect, a very notable bullish disconnect on the advanced decline, and your NYC tick is very balanced. It's not really printing any big downside values. If anything, the tick was signaling strength early in the session. So now the internals can be a factor that supports the trade idea. But that's not the primary factor, right? The primary factor in play here is the fact that it is ideal trade location, it is a short-term bias confirming zone, and there's potential for larger time frame buyers to be active there. So let's go ahead and structure the trade at initial support. So by default, you can see that Vulcan sets the entry to 39.5. And the low of day in this case was 39, so you would definitely get filled on that trade. And this is with very conservative upside targets, right? We're just looking for a move back to pre-market resistance and then just the next zone. I think at the very minimum, you can move the final target to the initial resistance zone, and even if you moved it higher than that, it would be okay. Because given this real-time view and the absence of initiative selling, this has potential to be a reversal point. Not simply a place where we're going to get a reaction back to resistance, but a intraday reversal point. Because in order for this zone to break, we would need to see clear signs of initiative selling. So excess weakness on the advanced decline, the NASDAQ breaking lower, big and sustained downside momentum. Those are things we look for when we're expecting or looking for initiative selling. And remember, that's simply a lack of downside momentum, simply a lack of weakness can attract responsive buyers at support. And in this case, we're not simply seeing a lack of weakness, we were seeing outright strength across the broader market. So this is a trade that you don't want to miss. This is a high probability trade setup. And if the market does reverse off of here and turns around, then we are probably not going to stop at even the initial resistance zone. Reason being that now the market has already consolidated between initial support and pre-market resistance. Early in the session, it made sense to daisy chain because there was still that open gap below, there was still the test of initial support that could happen, so the targets were still open and untested. So early in the session, if you were daisy chaining it, you could short both of these zones. But once the market goes down and finds buyers at the short-term bias confirming zone and then turns around and breaks out, well, now the intraday bias could be turning bullish. We're breaking out on high momentum, so the market's not going to stop here. We're probably going to go higher and test the bias confirming zones now. So your final target could even be up at 66.4875. That would be perfectly valid. So let's go ahead and push our final target up to the 48.75 zone. And if you set it up this way, now you can see that even buying 43 yields you 3-to-1 reward to risk. And if you're still buying the front of the zone, you have 3.7 R potential. If you still leave the order at the original entry, now you have 3.8 R or possibly more. So the risk reward is fantastic. The probabilities are in your favor. And if the market breaks out, then we're probably not going to stop at initial resistance. We're probably going to go higher and test the bias confirming zones. And that's another key trade setup that plays out over here. And those two were really the main trades this morning. Later in the day, when the market approaches 48.75 to 59.75, we are not looking to actively or aggressively short this zone. And the reason is the same or similar to why we were not willing to buy pre-market support or willing to short initial resistance. And the reason is that the market has now already responded just a little bit ahead of that zone and already pushed down into the intraday breakout area. So the move that we were expecting off of this area, it happened to kick off just a little bit ahead of the zone. So that move has already happened. This is where the principle of timing and sequencing of events can be very helpful and keep you out of some questionable trades. Because from a timing and sequencing perspective, if ES had gone straight line up and tested this zone, that would have made for a good short, and we could have targeted a move back down into the broken initial resistance and the broken pre-market resistance. But because sellers stepped in just a little bit ahead of that area, now that trade idea has already been used up. So now we're not interested in shorting this area. And if we're going to short the next zone, we need to secure better trade location because, again, the targets have already been hit now. So in this case now, you have to be careful even at the 70.5 back of zone. And we know that this zone has potential to cap the upside. So if ES had gone there, that would have made for a very good shorting opportunity. But shorting here, it's okay. You can do it. But it's not as good of an idea anymore because of the fact that we were pushing up on a very strong advanced decline line. We were pushing up on a big and sustained upside momentum. You can see that as the market breaks higher, even earlier in the morning, we are getting over a plus 1,000 on the NYC tick. And then when we push here on our second attempt to go higher, we're seeing plus 1057 again on the NYC tick. So clearly the low of days in, the intraday bias is bullish. The short term effectively becomes neutral in that situation, but even if you consider it to be neutral bearish, that's still okay. Just know that this is the one that can cap the upside. So if you're going to short here, if you daisy chain it, or if you put your stop at the next zone, then I think there's a more defensive way of taking the trade. Personally, I usually don't trade Friday afternoons, so this is not something that I was even around for. But even if I were around, I wouldn't want to just blindly fade the resistance area. I'd want to set it up in a more defensive way because I am going against the intraday bias and big momentum. And this is on the heels of a reversal off of a short-term bias confirming zone, a key area of support that we have discussed probably in at least 3 or 4 recaps over the last week or so. So if you are going to short near the 70.5 area, like I said, I would just either put the stop further out or, see how you can structure the trade at the zone that has potential to cap the upside. Now, if this zone does cap the upside, then where could the market go? Well, we can probably easily pull back into the broken resistance here and the broken initial resistance. Like, these are viable targets. This would not be a stretch at all. So in this case, our entry would be 85.75. So if you're going to short, then you're probably not going to get filled on this, but the entry, your stop loss on the first zone would have to be higher to allow you to, get in a defensive way. So if we put our stop behind the next entry, let's just see what that looks like. So 86 would be your stop loss, and in this case, I think again the final target can be a bit lower, but even if it's over here, that's still perfectly fine. So in that case, you can see that 71.50 would give you a defensive short, but you would need to risk 2R on the overall idea. And the reason that you can do that is because from the morning trade plan, the idea was that if the bearish move from yesterday is going to remain in play, then we want this area to cap the upside. And that's why as we head into the upcoming overnight session on Sunday and Monday morning, unless there is a strong rally that results in the market breaking out above 66, 85.75 to 95.75, our short-term bias will remain neutral bearish. So you can think of this as the bull bear zone on the upside and initial support as the bull bear zone on the downside. And as long as we're holding below this area, I think that the psychological and technical damage that was done on Thursday could still be relevant and in play. And tomorrow, next week's also a holiday week. It's a short week, so it's questionable whether buyers are going to be willing to buy at higher and higher prices. That is what we discussed in yesterday's recap, and I think that idea is still valid and in play. So as we head into the upcoming overnight, this area is going to be key, and if the market's going to remain in a neutral bearish state, then ideally we hold below even today's RTH high, and we don't even test this area. Then there would still be potential for the market to either balance at lower prices or at least go back and retest the initial support. And if we now go back down there, even though on the day time frame we can still get a response, remember that if you continue testing any given area of support or resistance, it can eventually break. So if we go down there now, I don't think the setup would be quite as good as it was this morning, unless, of course, we're also seeing signs of a lack of initiative selling or a bullish disconnect, which again seems very unlikely given where the market is closing, but never know. So as long as we're seeing signs of initiative selling, if the market now goes back down into that zone, it would be more prone to breaking. It is valid support until broken, but if we go back down there, it would already be indicative of a weaker market. Because if the market's strong, we shouldn't even go back down there. So the only way we go back down there and retest that area is if we're dealing with a bearish and weaker market. So I think now we will have to be careful even at that initial support and bull bear zone. And we can use the broken pre-market resistance and the broken initial resistance as support in the overnight session. And if buyers are going to have a shot at maintaining stability and the control from today, then we want to see buyers holding ES above The broken pre-market resistance and a break below this area would serve as an intraday bearish indication, and that can then lead to a test of today's pre-market support and initial support. So that's really it for today. Those are the main ideas as we go into the upcoming overnight session. And I mentioned this in yesterday's recap, but I'll remind you again that next week there won't be any live recap. It's a shortened holiday week. I'm expecting the volume to be a little bit lighter anyway, and we're going to be on a family trip, so the morning trade plan and the zones will still be posted, as they always do get posted, but we're going to take a break from the live recap sessions, and the live recaps will resume on Wednesday, December 3rd. So we're going to take a little bit of a break from the live recaps, and they'll continue once I am back in the US. Let me see if there are any questions, and then we will wrap up. Joe's saying, I took the pre-market short, and like you mentioned in the morning tweet, it bounced off the RTH mid, and internals were not weak. I got my scale. It bounced back up to entry. When do you go break even versus holding for second and third targets? There's not like a simple or mechanical rule on when to go to break even. I think that as long as your idea is still valid, you should hold a trade. And that's a consistent answer I've given to this type of question. Now, of course, the reality is that in real time, you have to try to be systematic, but at the same time, there are going to be situations where you get stopped out prematurely from that trade. So instead of moving your stop to your entry, because I think that's what most traders mean when they say break even, you might just want to focus on risk reduction rather than just eliminating risk altogether. So for example, you get your scale target, that cuts your risk by 50%, and that could be sufficient. That could be enough, where you don't have to necessarily move your stop to your entry, or you can move your stop a little bit to get closer to a overall risk-free position. That's an option, but nothing is going to ensure that you don't get stopped out prematurely and that you always end up holding it unless you just always leave the stop where it was. So, understand that there's no perfection in this game, and you have to do the best you can. And even after that, there will be times where the short or any trade setup gets short-circuited via movement of the stop. That actually happened to me this morning. I shorted, the stop moved automatically, and to not break even, but like risk-free, right? Zero risk. And I had to get in the trade again. Now, it worked out because my second entry was better than my first entry. So in this case, it was okay. But, if I didn't get that second fill, then so be it. It is what it is. So I wouldn't really spend too much time thinking about stop movement and, moving it to break even, because moving your stop to break even, especially after your scale has hit, there's very limited upside in that action. Like the most you will save is half an hour, right? Well, even if you don't move the stop, and let's say you just take the half an hour loss consistently, overall you should still come out way ahead because of the trades that you did end up holding. So when it comes to any part of your process and execution, just think about what the actual impact is of that action. And once your scale targets hit, you've taken 50% of the risk off. Now if you move your stop to your entry or to break even, what are you really accomplishing? You're saving half an hour at most. that's the maximum upside that you can get out of moving your stop. So think of it that way too. And then make a decision. And then understand that trading is messy. It looks super clean and easy when I'm showing you these entries and targets, via Vulcan, but the reality is that it's still a messy process, even when using Vulcan Trader, because of the psychology and, the performance pressure, those things aren't going to go away. So, make the best decision you can and just understand that executions are messy. It's the nature of the game. And as discretionary traders, all we can do is try to make the best decisions possible. And then overall, we should still be ahead as long as our good decisions overshadow and outweigh any bad decisions that we might make, or any mistakes that we might make along the way, or just dealing with variance, which is a natural part of trading as well. Lauren is saying, rather than do a morning trade plan for NQ, as you've discussed, I would find it beneficial if you did an NQ weekly market outlook, highlighting the HVNs and major zones and biases. Would that be possible? Maybe, possibly. It would depend on, kind of how many people are interested in something like that. And I just think that, to really make use of it, because context does change on a daily basis, I just think that to really get the most benefit, you would need daily zones, not necessarily weekly zones on the NQ. But, it's something to think about. So I'll consider it and see if we can add NQ as a potential market. But I really would like to do it daily rather than weekly. And even if there's not like a trade plan video with it, because I don't think there's enough time in the morning to put together a trade plan video for the NASDAQ. But even if I could provide zones for NQ and directional bias, similar to the S&P with identifying the bias changing zones, the bias confirming zones, the bull bear zone, all that stuff, that would be super beneficial. That would make, I think, a very big impact for anyone who's trading the S&P, and of course, that would then allow you to trade NASDAQ as well. And, Vulcan Trader supports executing NQ even now, and we do have a few traders who are trading NQ using Vulcan, but they enter their own zones. So even though they're executing using Vulcan, it's based on their own zones. So what I'd like to do is figure out a way where I can create some time in the morning to actually provide zones for NQ on a daily basis that then automatically get pulled into Vulcan, and now you can actually visualize everything, and that allows us to also create some additional features where we can automate the intermarket triggers, or at least alert you to a situation where an intermarket trigger might be in play. So there are a lot of cool things that we can do, but they all require loading up accurate zones and the market context into Vulcan for NQ. So I think that's still a little bit away. We're slowly kind of getting towards that. Like right now, with the help of Vulcan, even my morning process is becoming more efficient, and there are certain things where like the zones were being entered in 3 different places. Well, now they're being entered in 2 places. If I can minimize that to one place, just Vulcan, which would require automating the trader worksheet, then I think there would be enough time to produce accurate zones for NQ as well. So it's on the roadmap. Eventually I hope we can get there, but right now fitting that into the morning routine is very difficult, especially when the markets get so volatile. The more the volatility we have to deal with, the more time it takes to put together the trade plan and zones in the morning. So I'm going to play around with it, experiment with it, and hopefully by sometime early next year we can actually get zones going for NQ as well. And then anyone who's interested in NQ zones, I mean, it will be a separate service, I suppose, or like an add-on to the existing service. It would be something that would cost extra, and if we get there, then we'll do it. I'd like to do it. I think it'd be very helpful, even for traders who are only trading ES. I think having NQ zones would really help you sharpen up your timing, help you get better entries on the S&P, even know when to get out of the S&P. So I know like the benefit of having NQ zones and plan is massive. I just need to figure out how to fit it into the morning routine. So it's a work in progress, and I hope that we can get there sometime early next year. All right, guys, we will end it with that. Thank you for attending. I hope you guys all had a great week in the markets. And as always, I will catch you Monday morning with the trade plan and zones. And then the recaps will resume the following week. So happy holidays and happy Thanksgiving to the people in the US. And if you guys are traveling, then safe travels to you as well. Enjoy your weekend, and we will regroup Monday morning. Take care.